welcome. You're watching Global Business Report here on News9 Live. I am Krishna Kumar. We begin with Mercedes-Benz, an emblem of luxury and innovation as far as the world of cars are concerned, and it is now facing turbulent times because it is grappling with the ruthless nature of the electric vehicle market. In a recent statement, Mercedes-Benz has openly acknowledged that the quote-unquote brutal competition within the rapidly expanding EV or electric vehicle sector is severely hurting profits and is sending shock waves through the industry. This Reuters report tells you more.
Mercedes-Benz says the market for electric vehicles is getting brutal, and it warns that could bite into profit margins over the coming months. The luxury car maker on Thursday posted a near 7% drop in pre-tax earnings. They sank to just over $5 billion in the third quarter. Mercedes said fierce price competition and supply chain issues were making the EV market a tough battle. The company says some rivals are selling electric cars for less than traditionally powered models, even though they cost more to make. Chief Financial Officer Harold Wilhelm said the status quo could not be sustainable for the industry. Mercedes shares fell around 5% in early trade following the warning. Carmakers from Ford to Tesla have been slashing prices this year in a bid to prop up demand. Mercedes has largely refrained from following suit, but says inflation and other factors weighed on earnings over recent months. That echoes comments earlier in the week from Porsche, which said the luxury sector wouldn't be immune to global economic worries. On a more positive note, Mercedes said the industry was beyond the worst on inflation and energy costs.
Now, in a dramatic turn of events, China's biggest property developer that went bust recently, Evergrande, which is also one of the world's most indebted property developers, has been granted a remarkable reprieve in its ongoing financial crisis. A Hong Kong High Court judge has given the world's most indebted property developer one last chance to come up with a restructuring plan or face liquidation. This report tells you all about it.
Troubled Chinese property giant Evergrande has been granted one last chance. On Monday, a hearing to wind up the company was adjourned until December 4th. A Hong Kong judge ruled that this was the company's final opportunity to come up with a restructuring plan. If it fails, Evergrande will probably face liquidation. The giant developer has over $300 billion in liabilities and defaulted on its offshore debt in 2021. It's become a symbol of a crisis that has engulfed China's real estate sector, which accounts for about a quarter of the country's economy. That leaves investors around the world worried what might happen if giant companies like Evergrande face a chaotic collapse. Now the court says the developer has to come up with a revised restructuring plan before the December hearing. Its previous plan was thrown into doubt last month after news that the firm's founder was under investigation for criminal activities. Evergrande has also been barred from issuing new debt due to a probe into its flagship property unit. One lawyer for a major group of creditors said they supported the court adjournment, saying they would still prefer a restructuring to liquidation. Evergrande did not respond to a request for comment.
Now, bear in mind, the collapse of Evergrande did spook markets across the world, including the US stock markets, and Wall Street, however, ended on a higher note as the stock markets in the US surged forward, propelled by the unstoppable momentum of American corporate earnings that came out. Investors are cheering as the companies continue to post impressive results, driving optimism and confidence. The US Federal Reserve's Open Market Committee, or FOMC, begins a two-day monetary policy meeting today, which is expected to culminate in a decision to leave interest rates unchanged in the US. This report tells you more.
Wall Street rallied on Monday, kicking off what looks to be a hectic week with company earnings, economic data, and the Federal Reserve's two-day monetary policy meeting. The Dow climbed almost 1.6%, the S&P 500 added 1.2%, and the Nasdaq gained nearly the same. Mega-cap stocks performed particularly well, with Microsoft and Amazon outperforming the overall market. The moves come after last week's big tech sell-off, which Ross Mayfield, investment strategy analyst at Baird Wealth Management, says created a, quote, air of negativity around what has actually been a strong earnings season.
But overall, beat rates are strong. Even the big tech names came in pretty strong. There was just such a high bar to clear, and valuations were so elevated that I think they're giving a little bit back. But about halfway through an earnings season, you have a beat rate that's high and you're beating by more than average. So you can't really ask for much more against a backdrop of higher interest rates, geopolitical turmoil, sticky inflation, all of the macro headwinds we've been talking about. And yet companies continue to do their thing. So pretty heartened by that. Even if we're not off to the races, it's still putting a nice floor under equities.
McDonald's shares gained more than 1.5% after reporting better than expected quarterly results, driven by demand for its more affordable food as consumers contend with still sticky inflation. Shares of Western Digital jumped more than 7% after the company disclosed plans to separate itself into two independent public companies. And chipmaker onsemi's shares tumbled nearly 22% after it forecast weak fourth-quarter revenue on slowing demand for electric vehicles. On Tuesday, the U.S. Federal Reserve's Open Market Committee begins a two-day monetary policy meeting, which is expected to culminate in a decision to leave interest rates unchanged. And key economic data on tap this week includes the Labor Department's employment report for October, due on Friday.
HSBC, a global financial giant, is now making headlines with the revelation of a $3 billion share buyback program. And this significant capital allocation maneuver was expected to spark enthusiasm among investors. But, however, the financial world does seem to be full of surprises. What's the story behind HSBC's $3 billion buyback and the concerns raised by the company's disappointing profits? This report tells you all about it.
HSBC said Monday that profits more than doubled, but investors were still disappointed. The banking giant posted a third-quarter pre-tax profit of $7.7 billion, but forecasts had gone even higher, and the bank's Hong Kong-listed shares fell following the news. Shrinking profit margins on lending were among the issues. China's ailing property sector is another, with HSBC booking a $500 million charge over its exposure to debt-laden developers. But one analyst said costs were the main concern for investors. HSBC says they are set to rise by up to 5% this year, that as it spends more on technology and weighs up a boost to staff bonuses. A new share buyback is planned anyway. HSBC aims to complete a $3 billion transaction by February, lifting the total to $7 billion this year. The wealth management unit looks like a bright spot for the company. Money piled up there at a faster rate than before, with a net $34 billion flowing in.
In a spectacular show of enthusiasm, fans from far and wide swung into action in Argentina, all with one common mission in mind: to break the record for the largest gathering of Spider-Man enthusiasts. Take a look at this report straight from Argentina.
Spider-Man is a feeling because, as Stan Lee said, anyone can wear the mask.
I came here to support this beautiful community that is here. We are Argentines, so we have to break the record all over the world. We were not going to miss the record of being the best Spider-Man.
Well, I'll tell you what, the way Argentina's economy is, it's going to need not just Spider-Man, but all kinds of superheroes to rescue it. But with that, we've completely run out of time here on this edition of Global Business Report. Thank you so much for watching. This is Krishna Kumar signing off. Keep it with News9.